Welcome to the On the Rise podcast, where we talk about time freedom, passive investing through real estate, finance, and mindset. Let's dive in. Quick disclaimer as always, I am not a CPA, I am not an attorney or a financial advisor. This is not financial advice. I am not telling you or anyone else what to do. The views and opinions expressed in these podcasts are provided for education and informational purposes only and are not necessarily the views of my employer. All right, welcome back On the Rise podcast listeners. Thank you again for jumping into yet another episode of the On the Rise podcast. I've got another amazing guest with me today. More amazing than anything is this individual has been a close friend of mine for probably a decade and a half now, I'm guessing. And when I was in my tech sales days for 25 years, I actually reported directly to this individual. So in other words, Jon Ross on the show today was my direct report, as well as his wife was. So this is very much a personal podcast and a personal affair. So Jon, I just wanted to say welcome to the show and look forward to talking with you today.
Yeah, no, thanks for having me, Jeremy.
Absolutely. And to give my listening audience just a little bit of background on Jon. So Jon brings 25 years of investing experience as now the executive director of investors at Sol Pacific. His journey spans brokerage accounts, real estate income funds, venture capital. Previously, as mentioned earlier, he led an award-winning team at ADP and Aflac, and he served 9 years in the U.S. Army National Guard, including a deployment to Bosnia. So, Jon, you've got quite the colorful background. Thank you for your service to our country as a veteran. Would love for you to let us know a little bit more, about yourself, your journey, what you're focused on today, et cetera.
Yeah, no, that's great, Jeremy, and thank you for the great introduction. And it is an interesting background, and a lot of it doesn't always fit, together when you look at it as someone goes from a tech industry, into insurance and now into investing. And I'll tell you that each different career path change or environment that we worked in, whether that's being in direct sales, a manager, a vice president, into the franchise space and over to Aflac, has really shaped what I am today, which is really nothing more than an investor who's helping other people invest in opportunities that I believe are foundational to anybody's investment strategy, and a heck of a lot more fun than trying to pick the next Netflix.
Yeah, it makes total sense. I'd love for you to let us know a little bit more about, this kind of evolution, that maybe you went through, as an investor, maybe in terms of how, you view money, in general, what's really changed today, versus maybe the way that you thought and interacted with money, say 25 years ago.
Yeah, no, it's a great question. And one thing that we constantly think about is what would I have done differently 25 years ago? And it really, when you think about 25 years ago, we were, in our mid 20s, probably don't know a whole lot about anything about how money works. What is the stock market? Like, we're just hearing things like, I remember that was probably around the time when my uncle first gave me the tip: if you put 10% away, you'll be a millionaire by the time you're 40. And he wasn't wrong in that regard, but it was like, put it in what? And, right around there is probably where I went into the first IRA. And that was what you thought was investing. Like, hey, I'm investing, I'm putting it into an IRA. And then you get into something called a house, and then you get married, and you wake up one day and you're like, holy cow, I've got a kid, I've got another one on the way. And now I got to figure out how I'm going to pay for college. Is this going to work for me in retirement? And I would say that is probably around the time when things really change into what you would call a true investor. And that begins with the stock market. And then you realize that there's a much better game to play long term by not playing a game you have zero control over. Like, none. You can't control people's emotions. You can't control tariffs. You can't control anything related to the market. You can try all you want to. There's no way to time it. And that was, I would say, Jeremy, what brought me into private equity, into the first deal. And when that deal went, the next deal and the next deal and the next deal, and then venture capital deals, and ultimately brings us to where we are today.
Yeah, no, that makes total sense and appreciate that background. I know that you oftentimes talk about this kind of concept of, closing the investment gap. So what does that mean relative to today's current economic climate that we're in now?
Yeah, good question, and it's one that we get from our investors all the time, and it's one that I continually ask myself: is what is the gap? And what I mean by the gap is when you think about you work all day long and you put money into your 401k, and then if you really look at it, though, you're not in control of anything when you do that. You're going to work until the company you work for decides you're not going to work there anymore, and then you're going to retire on whatever your 401k looks like at the time, and maybe your social security, but you can't touch your 401k till you're 59 and a half, which means for sure you're not retiring till then. Then you got to worry about medical benefits, which puts you in the more like 65 range. And then you got to look and try to figure out, well, what is social security going to look like? And then what's my life going to look like? So it isn't, you don't get to decide those kind of things. You can try, but you're limited in what you can put into your 401k, and your social security is only going to take you so far. So if you want to try to control your life, you've got to fill the gap, which is you've got to try to figure out how to put your money to work to make more money every single day to bridge the gap between what it looks like your retirement account and social security is going to give you and what your life you want your life to look like. Now you can retire when you want to retire on your terms and with the income you need in order to support what you want out of your life and not what society decides you're going to have.
Yeah, you make a lot of sense there, John. And I kind of think about, when you and I first met, which is probably going on 2.5 decades ago. We probably had this discussion, back then when we were in our 20s, how much money do we need to retire, right? And maybe I threw out 1 million and you threw out 2 million. But now today, 25 years later, with the inflation monster, running rampant, and lifestyle creep continuing to set in, and the fact that you and I both have children that are young adults now, right? And do you really want to sacrifice a less than lifestyle today than maybe what you had or have had over the past 2 decades? I certainly don't, right? So it's kind of that concept of how do you what types of investments do you choose to invest into to bridge that gap, and which investments really help you to hedge against inflation? Does that make sense?
No, totally. It totally makes sense. And if you don't think like that, then you're back to again, you're letting someone else decide what your life is going to be like. Like I said, you can't. So the worst thing you can do is sell stocks when the market tanks. That's when everyone else is selling. The best thing you could do is buy stocks when the market tanks, but you have to have capital to do that. And the best thing you could do is get out of that cycle so you don't have to worry about an asset that actually goes up or down based on that. So when you look at things like, just take something very simple like real estate. You have well, three kinds of real estates, but two big ones that people look at: single family home, fix and flips, and multifamily residence. One of them is like a job, right? If you fix and flip it, you're doing the work and then you have to sell it, or you're fixing it and you're renting it, and you're the one who's going to get the phone call when the carrots clog up the garbage disposal because they didn't shave them into the garbage can and they call you at 10 o'clock at night. The other one generates the same type, if not better, revenue without requiring you to do any work. So if I'm not looking to change my career path or go into some other environment, I just want to put money to work, then multifamily real estate or even hotels is a great opportunity to do that, where the market doesn't dictate what happens, not the stock market, right? You can see housing issues on the horizon a lot further out than you can see someone deciding to change something that's going to hit the market. So you're trying to find those cash flowing assets that are going to produce long term and get into as many of them as you can. Like we had originally set a goal, let's just do one a year every single year. And at some point, one's going to be buying and one's going to be selling, all the time. But in the meantime, I've got all these cash flowing assets coming through on a monthly or a quarterly basis. And then in my opinion, what you do with those is what really matters, right? You get a $6,000 check on an investment. What do you do with it now? And maybe that's how you play the market. I know it's how I do, but I don't buy it until everybody else loses their mind and everything goes on a fire sale, and then I inject that 6,000 into whatever stock I felt was good at the time.
I'm Zach Captainstall, CEO and co-founder of Rise 48 Equity. Our goal is to help you protect and grow your wealth by investing in large multifamily apartment buildings. We do all the work as far as sourcing these large apartment buildings from the brokers, doing all of the on-site management with our vertically integrated property management company, doing all the renovations with our vertically integrated construction company. We completely rebrand the exteriors. We will renovate the interiors to our full platinum level scope, which increases the value of the asset to get that profit margin for the investor. If you'd like to learn about how you can partner with us on these exciting opportunities, and go to our website and set up a call with our team.
I appreciate you kind of highlighting, the benefits of investing in, something that's, cash flowing, consistently on a monthly or quarterly basis, that hedge against inflation. And you mentioned a really big, risk factor, being obviously the market risk and the volatility that exists there, but outside, putting market risk aside, what are some of the other maybe risk factors, that you look at when choosing to deploy, capital into a new investment?
I mean, that's probably one of my favorite questions, and that's where the people come in. Like, you have to know the people that are behind the deal. You don't have to necessarily know the developer, but you've got to know that the people behind the deal know the developer, right? They've got to understand the process of what makes that deal work. And it has nothing to do with hype. You could have the best investment possible in front of you, the biggest returns, the flashiest pitch deck, what looks like the coolest people behind it, and that deal could crumble in 5 seconds, because what matters most is the people that are managing that deal. I think you made a comment one time about an airplane captain, and everybody else is just the passenger. You wouldn't get on that plane if you didn't trust the captain. Like, right, you just wouldn't get on the plane. And I would equate these types of deals kind of to the same. If you don't know who the captain is and what maintenance they have in place to make sure that that plane is ready to go to take passengers on it, you're not investing, you're gambling.
That's it. Yeah, no, you nailed it. And for my listening audience, you should also know this, that it was really 25 years ago that Jon Ross here kind of opened up my eyes, to investing in real estate through a fund strategy. One of the very first investments that I made, in, kind of quote unquote real estate, was through Soul Pacific, the company that Jon, represents and works with. And so, Jon, I'd love to kind of maybe have, we'll hear it from your own, words. And that is, there's a lot of confusion that exists between, investment funds, versus syndications, right? So can you kind of break down the differences that exist between, each structure, and, maybe is one better suited for somebody than another?
Yeah, no, I think sometimes it matters of what your risk factors are, right? Like, a fund is essentially just a fund that houses a lot of assets, right? So if you think of like a REIT, for example, might be a whole bunch of multifamily real estate offerings that are inside of that REIT. A fund could be a variation of that. We have funds. It could be, a bunch of money that's been put in by investors that goes into deals that, maybe aren't ready for equity partners, but typically they have a lower rate of return. They're a little bit safer because you have things that are spread across multiple assets. But in general, if you play a fund right, you're looking for a fund that is in a specific asset class. You don't want a fund that is playing in too many different arenas, or your risk is greater. And a syndication is an opportunity for the investor to go into a specific deal. I'm picking this property because I like this state, I like that developer, I like this rate of return, or I don't like this state or that rate of return or that developer, and you choose not to do it. I kind of equate it to an index fund versus buying the actual stock. If you don't know which stock to buy, or you don't understand what your risk factors are, then buy the S&P 500 index fund and play them all. And if you do know, then pick a specific one and go into that one.
Yeah, no, I could definitely see that, with kind of a fund, there's more of a diversification approach, whereas with like a single asset syndication, you're really kind of diversified into just that specific, investment that you're going into. Are there any tax advantages, one way or the other, that maybe investors should take into consideration?
There are, and some of it depends on whether or not you're a real estate professional or not. If you are, there's some huge tax benefits and ways to play in a syndication that you wouldn't necessarily find in a fund. right? They're treated differently depending on the fund. You might be, earning interest inside of a fund and you're getting a 1099 versus a syndication, you're getting a K1, which also can complicate your tax returns. But a K1 also comes with depreciation. So if you're just a normal Joe like I am or I was, there are definitely some tax advantages to going into a syndication. They're not as great as I think some people think they are, but they are there. And if you can create certain types of passive income in other ways, you can unlock some of those benefits just like a real estate professional can.
Yeah, makes total sense. And neither John nor I are CPAs or tax accountants, tax specialists, and neither one of us play one on television either. So just that as a bit of a disclaimer. John, I'd like to talk a little bit more about this EB5 strategy. Okay, for those that are unfamiliar, what exactly is it, and how does it fit into Soul Pacific's kind of broader investment approach?
Yeah, this is a bit of a newer. I don't know if I'd call it a strategy because it's just an investment vehicle that's been out there for a long time. But EB5 is an opportunity for someone from another country who is interested in becoming a U.S. citizen, the right way, and they're doing that through an investment, and that investment has to create jobs, right? And if you think of what type of investor that's going to go on it, it's typically 800,000 to 1,050,000 to go into a deal like that, depending on the type of deal it is, where it's located, the jobs, what opportunity zone it's in. But somebody can invest in it and their whole family becomes a U.S. citizen in a shorter period of time than, say, the H-1B visa, which we heard anywhere from 17 to 70 years, depending on who you talk to in there. But what it does for Soul Pacific and for Soul Pacific's investors and our developers is it allows us to take a piece of the capital stack, make it cheaper for the developer, and carve out and make room to bring in, say, 10 or 15 of these investors that are highly sought after inside of hospital systems, inside of, you think of data centers, right? These aren't made for somebody who's going to work at a wharf someplace because they're cheap capital to get in from another country for some resort. These are very highly sought after people. These are the people. I made a joke the other day. Like, this is the guy or the gal that you want when you have open heart surgery. I want the best one there is. And if there's a way for us to help get that person into this country and also make sure that we're providing a way for investors to earn more of their equity back because we've removed a piece of it. Now we've opened up the opportunity for us to do 60, $100 million deals, benefit the local economy by injecting jobs, injecting the opportunity for people to have better housing or more housing where it doesn't exist, and we get a great member of the society who's going to do great things outside of another country. So it's just a very unique opportunity for us to use our investment strategies and our properties and our developments to do multiple things, and mostly it's to drive revenue and income and growth and jobs in local economies.
Yeah, it makes total sense, and a way to capture, foreign investment, dollars that will be deployed right here in the United States of America. So definitely appreciate that breakdown. So I know, as I mentioned earlier, you were a part of the U.S. National Guard. You spent 9 years. How did that experience, really influence your leadership style and maybe your discipline in investing?
Yeah, one of my favorite lines I ever heard was back in boot camp, and I use it today. I used it back the first day you and I probably met each other, and it's been a pillar of my, I would say, success, which is that the longer you're going to be someplace, the deeper you dig the foxhole. So if you're going to be in one spot for 5 seconds, then just get behind a tree. The gunfire's not going to go through. It's going to be over in 2 seconds. Just hide there for a second and let everything go in. But if you're going to be invested in something for the long term, then you've got to improve your fighting position every single day. So in the military, that would be digging a deeper foxhole, doing things like diverting grenades when they were to come in. And in real life, it's just like when you were at ADP, like you constantly become a student of the game. You get better every single day at doing the things that you need to do that are going to make you great. And investing is the same. Every single dollar that comes in should be looked at as, how can I use this dollar to improve my fighting position, which is nothing more than your fighting position, right? Take control of everything. And that evolves over time, right? The longer you do it, the smarter you get, the more people you surround yourself with, and the more weapons you have in your toolbox to be able to defend off things like inflation and job losses and when you can retire, all of those sorts of things.
Yeah, spoken from a true expert, and great analogy or analogies there. I'd be remiss not to ask you another kind of similarly related question, and that is, what's the coolest or most memorable story? Excuse me. What's the coolest or most memorable story from your time spent in Bosnia?
Hands down, I have a lot of them, but hands down, it had to be when we were overseas in Bosnia. I was guarding a brigadier general at the time with an entire staff and logged over 180 hours in a Black Hawk helicopter. And if you've never been in a Black Hawk helicopter, it is an absolutely amazing machine on how fast it could go. And it sparked almost every conversation. Somebody says, John, how do we move sales faster? I'm like, just get me a Black Hawk and we're good, because a 3-hour road trip is now 20 minutes, and one of those things, they go fast. So really cool experience, super fun. And in Bosnia, it's all mountains everywhere, right? So you get the views like you're in a plane. You're just moving a little quicker, and those things can just maneuver like nothing I've ever seen before. So my wife hates helicopters, likes planes. I love helicopters because of all the hours I was able to spend running around with a general in another country.
That makes sense. And thanks for sharing that. Really next question is, what's really next for Jon and Soul Pacific? Any upcoming initiatives that you're focusing on or that you're particularly excited about, heading into and through 2026?
Yeah, there's a lot of different fun things going. So EB5 is kind of exciting because it's new. Most people might not realize it, but almost all of that money is driven by foreign agents that take most of the revenue from the investor. And, we're going to try to do some shape shifting on that and see if we can't find people that can use that right here in the US, and including we're in my home state of Minneapolis, and try to get things done there. But we've got a Spring Hill Suites by Marriott property coming out before Thanksgiving here. And we've got a lineup of loaded properties that are brand new construction builds. So a little longer hold times, great returns, but beautiful properties that we're very excited about to see those things go. And then, of course, our income funds, and we've got a tax-free debt fund that's out there, are also pretty exciting for people to get into. So a little bit of flavor of what everybody's looking for, depending on what your risk tolerance and your hold times are. We feel like we've got a little bit for everybody. And if we don't have something for everybody, I've got people that have things that they can get into that might align better with what they're looking for.
Yeah, makes total sense. Well, Jon, I really appreciate the tremendous value that you've brought our listening audience today. And of course, thank you for your ongoing friendship. Might there be one or two different ways that our listeners can connect with you offline to learn more about what you're up to?
Yeah, I mean, you're welcome to share. I can share my email address with the group if they wanted to connect with me, as jross@soulpacificinv.com. You can call my cell phone, 612-381-6777. Anytime, even if you're not looking to invest with us, it's okay. I like to communicate with people and get people connected with as many people as I can that gets them where they're going. So hopefully somebody reaches out, or some folks reach out, and if I can be of help, I'm here.
Well, that's great. Well, we'll definitely put those in the show notes for the episode. And listening audience, Jon is a master networker, so he definitely will do as he stated here. So do please reach out to him if you've got interest in connecting with him to learn more about what he's up to. And again, listeners, thank you again for jumping into yet another episode of the On the Rise podcast. We look forward to having you join us on the next episode.
Thank you for hanging out with us today and for listening to the On the Rise podcast. This show is for entertainment purposes only. Nothing said on this show should be considered financial advice. Before making any financial decisions, please consult with a professional. This show is copyrighted by the On the Rise podcast. Written permissions must be granted before syndication or rebroadcasting.